Welcome everyone to SilverWars.com. We are here today with the great and powerful King Kong, Eric Yeung. He is going to go over great detail about how the COMEX works. Now, this topic is extremely difficult and complicated. So, Josh, why don't you shoot off the first question to King Kong?
So in this market right now, there's a lot of chaos, a lot of confusion about how the COMEX, as well as in conjunction, the LBMA are functioning with these deliveries. Can you explain in general take of what actually is going on there?
So my take is that there are, in terms of physical gold, there are some big buyers of physical gold in the US who are standing for physical delivery.
Mhm.
So think about what that means. Think about what that means, okay? First of all, let's give you some numbers for context. In the last almost 3 months now, the US has imported more than 2,000 metric tons of physical gold. So that's information from StoneX and Bullion Vault, who are LBMA members. So this is not some guy off the street from the street corner telling us this. These are reputable LBMA members.
Yeah, and I think it should be
telling us
noted
that the US in such a short period of time imported 2,000 metric tons of gold. Yeah.
And I think it should be noted that StoneX has direct ties to Rothschild. Just throwing that out there.
Okay, but yet they disclose this information, right? That the US imported 2,000 metric tons of gold. And Ron and Manny has recently pointed out that from US gold import data, it doesn't even show all the physical gold that the COMEX imported during this period. So where is the rest of the gold from US import data? Most likely it was imported as monetary gold. What's happening is that the US probably imported a lot of monetary gold because the official trade data from the US doesn't show all the gold that they imported within the last 3 months, the 2,000 plus tons. Okay.
Is that data missing completely, or is it just obfuscated?
I think that data is missing. That's why Ronan said that it's probably reported as monetary gold. If it's monetary gold, it's not public data. We don't see it.
Gotcha.
Okay, we see commercial data. So that's the benchmark. That's the reference that we go back to, the 2,000 metric tons of gold coming in, right? So we think that's monetary gold. We think that's the U.S. government is the biggest buyer for this gold in the last 2.5 months.
Yeah, but why would you? What's your speculation take of why the government is doing this? And how does the longs at the LBMA play in?
Well, the government is doing this so that they can, first of all, they can audit all the US gold to 8,133 tons, that's what they say they have. And then after the audit, what they can do is they can revalue the physical gold from $42.22 to market price, which is whatever it is at the time when they revalue the gold, right? It might be 3,000, might be 3,200, and after that, they will remonetize gold, meaning they will use gold as a collateral, or they will use gold as part of their U.S. Treasury bonds, like what Judy Shelton is proposing.
Now, why is that important?
So that's the plan.
If they are going to revalue it, does that mean that now there is a price, whatever that price might actually be? Is that actually now the price to say?
There will be, right? It's just mark to market. Mark to market means that you are revaluing it to market price, whatever the market price is.
So it's a
Now, the
floor.
reason,
It's a big
yeah,
floor, right?
yeah, of
Essentially.
course, right? Because once you monetize gold and you mark-to-market revalue your gold, to give you an example, right? Let's say you own a house, you remortgage it. Your house is worth $1 million. You remortgage it, you extract liquidity out of it by using your house as a collateral, and you get a couple $100,000 out of it. What's the worst thing that can happen? Is that your house value drops. You don't want your house value to drop
Yeah, you're
if you
wrecked.
remortgage it at $1 million, right? Like, so that's the kind of thing that will happen. That the U.S. government will, if they revalue it at $3,000, that's the floor price of gold at that point. I don't even think the U.S. government need to do anything to maintain that price, because once the U.S. government revalues the price of gold to market, the market will probably revalue the gold price even higher from that point on because of the confidence that the U.S. government installs on gold.
So it's going to be pegged at that market rate rather than
This
just
is
be
not.
valued
It's
at.
not pegged. It's
No,
not pegged. It's valued on the U.S. Treasury balance sheet
gotcha.
as that. So they might, like they might do it every year after that.
Ah, that's
They
true.
might do it,
They could.
they might do it like, every 4th of July, for I know, right? For every 4th of July or 5th of July, because 4th of July is a holiday, right?
Hmm.
They do every 5th of July, they would revalue the gold to market price every year. That would make
Likely
sense.
though, they would only want to do it when the price has gone up, because to revalue it when the price has gone down would just screw them over, right?
Correct. But what I just told you, Josh, is that the price probably won't go down from their initial point of revaluation.
Well, not initially,
Because,
but I'm talking like if this system were to be implemented, and then 5, 10 years down the line, the price, goes down. They maybe skip that year and wait for a year where the gold price was up to then look into it again to add more
yeah,
value to
that
it.
will make sense. That will make sense. Yeah, I see what you're saying. Yeah, but not now. Not the initial one, right? Because the
No,
initial one, I think they'll revalue it and then the price will probably shoot up.
Now, I kind of derailed you a little bit with that side topic, King Kong, but essentially, when a lot of us are talking just on Twitter and Reddit, they're always asking like, how does the COMEX actually work, and why does the LBMA not come up during this? Usually, what can you
Yeah,
explain why? I mean, you don't have to go into super detail, but for the layman's out there, for us,
yeah,
laymen.
absolutely. Absolutely. So you guys, like, you probably heard this from Ted Butler and a lot, Jim Sinclair and a lot of people. Like, I'm just using these guys as examples because they were the ones who first talked about this, right? They recognized and realized that there are huge short positions. They call it naked shorts, right? At the
Hmm.
COMEX for gold and silver. They talked about it for years, right? So I wouldn't say I understand 100% of it, but most of it. I understand most of the system, what's going on. And I tell you right now that the COMEX and LBMA may not be one legal entity, but they work as one entity. It's actually COMEX, LBMA, and the ETFs, the gold and silver ETFs. But let's stick to COMEX and the LBMA for now.
Hmm.
okay.
Why do I say that? Why do I say that? You have all the concentrated short positions of gold and silver at the COMEX. That is true. I'm not going to dispute, what Ted and Jim said over the years. That's true. And what everybody else is saying right now, because they keep saying that. That is happening. But guess what? A lot of these concentrated short positions by the bullion banks at the COMEX are hedged with an, I'm going to put this in quotation marks, equivalent long promissory notes position at the LBMA. What they call this in finance terms, they call this a basis trade. A basis trade is where you short a futures position and you long a physical position. Now, that might cause some confusion because they are like, what essentially this implies is that the promissory note is a physical position, physical metals position. It can be, right? Because the promissory note is supposed to allow the buyer to take delivery at the time of delivery, right? Within like a short period of time, like T+2. It's just recently, with what's happening at the LBMA is blowing up, that it became T+60. Okay, but normally it's T+2 in the past, so they consider that a physical position. You see how that works? So the LBMA and the COMEX work together, and the bullion banks, the bankers, they would short the COMEX and they would long the LBMA paper promissory note position for gold and silver. To do what, guys? To make money from the arbitrage. So
Just
that worked as long
over time.
Yeah. So guess what? That worked as long as they were able to suppress the COMEX prices of gold and silver lower than the LBMA price. Makes sense? Because they're long the LBMA, but they're short the COMEX, right? So that worked as long as what they call that the EFP spread. Okay. So as long as the EFP spread is positive, that worked. They made a lot of money. The entire system is built for the bankers to skim off the top. Have you guys watched that movie in Casino with Robert De Niro? Okay, this is what this is. It's a humongous system for the bankers to skim off the top using this EFP trading pair of shorting the COMEX and long the LBMA paper promissory note. Is that clear?
Yeah,
cool.
that makes perfect sense. So a giant closed racetrack, essentially.
Yeah, but like, listen. But even with all that wonderful, I guess a perfectly designed paper system which they have there, right? Some people may want physical delivery in the past, correct? Because they deliver physical gold and silver at the COMEX and at the LBMA.
Right, the biggest
so the LBMA
players.
They do, right? Say they do. So what did they do? The LBMA shows and the COMEX shows, they come to me, Eric Yeung, and they say, hey, guy, that's just an efficient system. It's perfectly run. What did they do? You know what I call it? You know what I call the LBMA COMEX system, along with the ETFs? I call it the LBMA fire brigade, like a bunch of clowns on a fire truck, right? Why did I say that? Why did I say that?
Because when something happens, they come out like a clown show and try to
dismiss it. Yeah, but I'll explain to you why. Okay, every single time gold and silver price goes up, what happens? They try to put it out, but not in a way that most people tell you they do it. Not just by sitting on the concentrated shorts at the COMEX. I mean, yeah, that played a big part in it, of course, right? Because you're shorting the COMEX. They're hedging the risk at the LBMA, right? With that long position that I just mentioned. But what else are they doing? They're importing metal from the outside, right? From miners. Josh knows that. We discussed that. But that, of course, the mining production right now is not enough to satisfy industrial needs. We know that. That's a fact. Absolutely. Even with the somewhat dubious Silver Institute figures, they admitted that there's a shortage, right? I know that we think it's not completely legit, but even they admitted that there's a shortage, right? Well, mining shortage.
We know that they're history revisionists because if you can pull up past Silver Institute World Survey reports and look at the data itself, and every year is different. So they're literally suppressing, I believe, the photovoltaic category because that one the data shows that we're going to be running out of silver just because of that one industry.
Okay, so back to my story though, right? Why, like, they have silver coming in or gold coming in that they import from miners, but what else are they doing to what I call structurally suppress the price of gold and silver? They have that pool of gold and silver above ground in either COMEX bar form or LBMA bar form, or like at the ETFs. What did they do?
I would imagine
they would shift that silver and gold all over the place using the EFP mechanism. The physical silver and gold. It's the same gold and silver.
Back and forth, isn't it?
It's just back and forth. But you know what's crazy? A lot of people think the values are all different for these three entities, right? For COMEX, LBMA, and the ETFs. But let me tell you something, guys. First of all, the COMEX and the LBMA, they don't have no central vaulting system. It's not like what most people think. It's not like you go into the COMEX, a building, and then they have a vault full of gold and silver. They don't do that.
And where do they keep it?
They keep it with JP Morgan, HSBC, at the JP Morgan HSBC vaults. You see?
Oh.
So it's a certified vaulting system. They certify the bank's vaults, and then they will do the transactions and the storage there. It's the same with the LBMA. LBMA is not even an exchange, it's OTC. So that makes sense, right? Like if you OTC, why would you have central vaulting? Okay, but the COMEX doesn't have central vaulting. They do the vaulting with these commercial banks or bullion banks.
Basically just act as custodians.
Custodians, exactly. For the COMEX and its clients, or for the COMEX and the authorized participants. And it's the same thing for the ETFs. The ETFs are custodian by the same banks. So imagine this, that all that gold and silver, they are located pretty much at the same locations of all these three entities I'm talking about, right? LBMA, COMEX, and the ETFs. I mean, LBMA and the COMEX don't really overlap, but they overlap, each of them individually overlap with the ETFs.
So basically,
in terms of physical storage, we suspect that there's. Okay, for the LBMA, probably because the LBMA data is crappy. They don't disclose anything, pretty much. They disclose one big vault number. That's it, on a monthly basis. So there's no way of knowing.
So with lack of transparency, complete.
Yeah, with the LBMA, right? With the COMEX, there might be, because the eligible category at the COMEX, you got to remember, JP Morgan vaults for the eligible and also for the registered, it's the same vault where they keep the SLV silver and the GLD gold. That's number one. And number two, SLV silver and GLD gold are qualified to be eligible bars at the COMEX. You see the problem?
Beautiful.
Now,
beautiful.
Are the bar specifications equal? In terms of
they're equal. Yep.
Ain't that a coincidence?
GLD and SLV bars are COMEX qualified. So basically, that's the definition of eligible, right?
So they don't eligible bars. They don't have to re-refine anything. They just take it from one vault, move it over to another.
Exactly, my friend.
And probably not even moving it in some cases, right?
That's why they of course they don't move it. It's in the same vault. They just put a new label on it. And remember just recently the borrowing cost of GLD shares and SLV shares shot up because the bullion banks, what they do is they borrow GLD and SLV shares and they withdraw the metal from the ETF. You see?
And that's from the exchange for physical.
Yeah. If it circulates back into the LBMA or the COMEX from the ETF, they would use the EFP mechanism to do that. Correct. It's just recently the physical components shot up because of the squeeze that is going on.
Right.
Because what's happening is, remember I talked to you about the positive EFP spread? They're making money off that arbitrage. Well, what happened in the last 2.5 months? Right now it's slightly positive, but before a week ago or 2 weeks ago, it was hugely negative. What that means is that it was actually cheaper for the people who were holding the promissory notes at the LBMA to not to not cash settle with their COMEX short counterpart, but rather bring the physical metal to deliver to the COMEX using EFP. Okay, because EFP is the cheaper way to settle all these contracts.
Oh, so it makes perfect sense that they have to do it that way then.
Let's put it this way: there's only so many ways that you can settle this, right? You can roll it over, which means you're not settling. You can EFP cash settle. You can EFP deliver, meaning that you bring the metal from the LBMA to deliver to your COMEX buyer. That's still off exchange. You can deliver directly at the COMEX physical, okay? Or finally, you can paper short cover at the COMEX. So what that means is that you would buy a spot contract equivalent of your a long short spot contract to cover your short contract so that it cancels out, right? But when you do that, you're essentially robbing Peter to pay Paul at the COMEX. And when you do that, like that paper short covering at the COMEX, that affects the price the most.
What do you think?
So now, do you guys see? Yeah.
Like, what do you think is the way that they're using the most right now? Like, just based off of the data that you see and how you understand it.
EFP.
It's all EFP?
EFP. Okay. EFP. Not all, but most of it. Because you see how they're keeping the price of gold and silver within the range? Mm-hmm. That's how they do it. Because EFP settlements are the least, it has least effects on the price. Like in terms of moving it up, I mean. If that's what they prefer, right? If they do it by EFP, they can slam it easily. But it also it also allows them to control the price so that it wouldn't move up as quick. If they do it by
ceiling, right? Like just like
well, think about it. EFP is off exchange, right?
Yeah.
Off exchange. Think about that, right? So what would affect the price most? On exchange. Whichever direction. Make sense?
Yeah. Yeah.
Like up or down, right? If they do it on exchange, it will affect the price most. If they do it off exchange, it will affect the price less. That's why most of it is EFP. They prefer to do it by EFP. They're not here to make... Listen, I'm going to say this, guys. They're not here to bet directionally which way it goes. They're here to make the arbitrage. That's it.
Gotcha.
Does it make sense? Right? Mm-hmm. Suppression is structural, right? It's not what they do on a daily basis. Yes, they can nudge it maybe lower, right? If they see the CTAs and the managed money overly long, they can do that. But in terms of them making money on a long period of time, it doesn't really matter if it goes up or down, as long as it's not straining their physical supply at the LBMA.
As long as they're able to meet the actual real physical.
That's correct. That's correct. As long as they're able to meet the actual physical delivery demand, then they can play this arbitrage game forever. Skim the top.
Now, I'm curious because, the apes often, look at early mornings, Fridays, a big influx of paper contracts that do flood into the COMEX to usually tamp down on the price. Are those the EFPs as well?
Yeah, because the London, like LBMA, they have the London AM and PM fix. So that's how they fix the price. They don't. It's not like what they do at the COMEX, where the price is real time. You have buy and sell, buy and sell, buy and sell like that. No, the price of the LBMA for gold and silver are fixed arbitrarily by a panel of LBMA members. StoneX is one of those members, by the way. They are one of the members who are contributing to the price fix. So they would fix the price once at 10:30 a.m. London time. And then they would fix the price again. Like I'm talking about gold and silver price, right? Again, in the afternoon at 3 p.m.
So this is historically the London gold fix.
Oh yeah, but now it's called the LBMA price fix, right? Yeah. It used to be the London gold fix. Now they call it the LBMA price fix.
But it's basically the same thing.
Okay. So how does that affect the COMEX? Of course, they want to slam the COMEX because remember what I said, right? They're playing the arbitrage game. The COMEX price has to be lower than the LBMA promissory note price, so that they can have a positive EFP spread.
Gotcha.
Right.
Now I'm
so
curious. I'm curious now. Going back to J.P. Morgan, they got busted for over $1 billion several years back for doing a ladder attack in order to make the money
spoofing.
Spoofing, yeah. So
spoofing,
how does that play into what's currently going on? Have they completely forgotten that tactic, or is that somehow related?
No, those guys are the small fish within this whole manipulation game. They are just like the Bud Fox, in Wall Street.
Yeah.
You get it?
Mm-hmm.
It's the structural thing. Manipulation thing is what I just talked about. Is how they have the huge short positions at the COMEX, and the long money, the easy money, right? The easy money that comes in every day, is the basis trade that they're doing. It's the short COMEX, long LBMA, promissory notes arbitrage that they play. That's how they make money primarily, not the spoofing.
That's their bread and butter. Right.
That's the bread and butter. You got it. You got it. Finally, we got it. Right? And that's why I'm going to say this. That's why Jeff Curry, Jeff Christensen, Keith Weiner, and a lot of other people, they tell the apes, and they tell people like the gold and silver pumpers or whoever they are, they tell them, you guys don't understand how this works. When all the apes and the gold and silver pumpers, all they talk about are the concentrated shorts at the COMEX. That's what they're talking about. They are talking about the basis trade that is going on. That is directional in theory, right? Directional independence, like gold and silver price directional independence.
So
Make sense?
What do you think?
They make money either way. Yes.
So stackers, like you just said, all we hear about and all anyone talks about the COMEX. What is that percentage that you would give that, and then what is the rest? Like, is it all the EFPs you were talking about? So what would you give the COMEX trades as influencing all this in a percent wise, and then what would you give the rest?
It's difficult to say, comrade, because it's a good time. There's a good time to jump into something that most people do not understand. They think they understand. When, let's say you're at the COMEX, you take delivery of the metal. So when you take delivery, what happens? The metal, once it comes into the COMEX, is in the eligible vault. But remember, these are the same. These are like just JP Morgan HSBC vaults, right? Mm-hmm. Okay, so the eligible vault and the register vault is the same physical location. It's different by name only, okay? Same vault. But we have to, like the COMEX and us, we have to identify them by eligible and register because of the nature of the gold bars, right? Meaning like what they're going to be doing, okay? So eligible is just you are compliant with COMEX standards. That's eligible. So what happens when you withdraw? you get issued a warrant. A warrant is just a claim to the metal. So once you issue the warrants, that metal becomes registered. That's all that is.
It's just that it's tied to some sort of ownership.
Yeah, tied to some sort of ownership, but it doesn't mean that the metal is removed from the vault. So now you have one vault physically, you have registered, and you have the eligible sitting at the same place. And the stuff that you took from eligible is now registered because you issued a claim to the metal called warrant. Makes sense? Like, is that simple enough, guys? Okay, got it.
Who owns the eligible then? Or is it just ownership by the banks or the producers?
If you're shorting the metal, then you have to deliver the metal to the COMEX. It has to go into the eligible vault. Very good question, right? Does it make sense?
Mm-hmm.
So if you're a bullion bank and you're massively shorting the metal, you have to get the metal in the eligible vault. Does that make sense? Or anybody massively shorting, you have to get the metal because otherwise it's not compliant with COMEX rules.
It's not the honor system.
No, it's not on the honor system. There's actually, inspections on that, right? You can't just have some gold bar that is of a uncompliant standard. Like, for example, the COMEX have 100-ounce bars and 400-ounce bars. So those are the compliant standards.
Mm-hmm.
It has to be 400-ounce or 100-ounce according to the contract. Okay, so anyway, back to my story, right? So now you have the warrant. What happens? You can do two things. You can either request for delivery. What's that? You take the warrant and you go to the through your broker, okay? You go to the vault and you withdraw that metal out of the bullion bank, out of that COMEX certified vault. So that's physically removing the metal, okay? That's easy enough to understand, right? That's withdrawal.
Right.
What's the other possibility?
Yeah, can't you just do a cash equivalent, though?
But if you do cash equivalents, Josh, you wouldn't be at that stage, right? You can, right? You can also pick your warrant and just sell it for cash. Yeah, sure. But
then what's the other option?
The other option is to what you said, right? It's kind of basically cash. You recirculate that warrant within the COMEX system. So you sell it for cash. No, you sell for kind of. You sell for cash to somebody else, right?
Gotcha.
So that warrant is to settle another contract, and you get cash in return. Get it? So that's how
people when they're fucked.
That's how it works. So that's why, let's put it together. Why are we talking about all this stuff, right? The reason why we're talking about all this stuff is because in the past, you have all these experts, all these guys, looking at the register vault and say, oh, that's how much metal is leaving COMEX. No. Register vault, all it means is that it's issued and warrant. Mm-hmm. It doesn't mean that the metal is withdrawn. Metal withdrawing from the register vault is something else.
What would that acronym or terminology be?
There's no acronym because they don't want you to know about the withdrawal, right? There's no acronym. They so withdraw something else. But a lot of the times in the past, the stuff just recirculated. Okay?
Mm-hmm.
That's it. That's what that is. The whole system is not to encourage people to withdraw metal from the COMEX.
Just to make money.
Just to make money, exactly. It's to encourage you to paper settle. Okay?
Yeah, makes sense.
That's it. That's all this is. I'm trying to explain how this works and why. It comes to something interesting right now, right? Why would the LBMA be blowing up right now? Why would 2,000 metric tons of gold be imported into the US and more, right? And why would silver be draining at the LBMA? You know what that means, guys? That means somebody at the COMEX is saying, no, I'm holding on to my warrant, okay? because the registered vault still looks pretty big, like number right now. Okay, that means like a lot of stuff have been delivered, but it's sitting at the registered vaults at the COMEX. So that is indicative. That is telling me that somebody's holding on to the warrants, saying, "I'm going to keep the warrants. I'm not going to recirculate all these warrants within the COMEX system." That's what that means.
So basically, they have ownership of it, but they still haven't taken physical delivery of the physical product.
If you're the U.S. government proxy or U.S. government, what do you care? You just leave it at the commercial bank vaults, right?
Yeah.
You just leave it there. Another thing I found out recently, because I was researching the effect and the intricacies of Basel III. You guys all know about Basel III, right? So I was doing some research on that. But we're not going to get into it here because, believe it or not, the Basel III system, it's even more complicated. It's even more complicated than the LBMA and COMEX. Isn't that crazy? They make things so complicated, right?
Well, so that only so many people understand it, and they can do this whole thing again.
But I made it simple on my page. If anybody is interested, they can go on my X account and they can just type in Basel III, and then they will see the post. I explained it very clearly.
So anyway, movie magic, we're going to have it on the screen.
Okay, cool. So what's happening? What I think is happening is this: a lot of people ask me, where did the U.S. government get the money from to buy all this gold?
I mean, isn't that money
if it's the yeah, sure, but like they have to allocate that money somewhere from their treasury system, right? Where's that from? 2,000 plus metric tons, right? It's over $100 billion, I think, something like that. Where? Let me tell you guys. Let me tell you guys where it's from. Yeah, but let me tell you guys where it's from, right? Okay. So I bet you this is like speculation, but based on facts, that a lot of the U.S. government gold, the 8,133 tons, or at least a big part of it, were in a unallocated format at U.S. commercial banks who are voting members of the Federal Reserve.
It would make
Why do I say that? Why do I say that? Because the U.S. Treasury gold, the 8,133 metric tons, they are under the custodianship of the Federal Reserve. We all know that. Correct? Okay. So the Federal Reserve is just made up by all these U.S. commercial banks. So that would be natural. Like if they are to rehypothecate or lease U.S. Treasury gold over the years, it would have been through U.S. commercial banks. That cool?
Yeah, makes sense to me.
Okay, makes sense to you, right? I mean, I don't think even the experts, I don't think they'll challenge me on that. Okay, so if they were to do it, it would happen through the U.S. commercial banks. So they did all that over the years, and it was unallocated. What's happening now? Basel III is happening in July. I think it's July 1st
14th,
or July 7th. 14th, they changed it? Okay. But it's happening soon, July. And if the US government is to revalue the physical gold and order the gold, what has to happen first? They have to turn that unallocated gold, which is probably just a piece of paper, okay? They have to, because it's over so many years, right? Like they might have 5,000 tons of physical and 3,000 tons went, God knows where. It's just a piece of paper now, right? They have to take that unallocated gold and turn it back into an unencumbered allocated gold.
In layman's terms?
In layman's terms, if it's unallocated, that means it's just, in reality, it's just a promise of gold that you'll get back in a certain weight and purity. But it doesn't necessarily mean it's the original gold that you stored with the custodian. That's layman terms. Make sense?
Okay.
So they just promise you, okay, like 10 years, we'll give you the gold back in that purity. And like it's like you leave your child with a daycare, and they'll say, "We'll just give your child back. It looks like your child, but it's not necessarily it's the same child."
Yeah.
So,
Okay.
like when
Get
I
it?
go when I look for like a vaulting service, and it's basically between that or segregated. Segregated being probably the opposite, where you actually have a bin that's your name on it, right?
Yeah, it should be segregated and allocated. Allocated means that thing is yours with the serial numbers, everything all recorded, right? If it's unallocated, then you're like a U.S. Treasury. It's not. They'll just give back like the same purity, the same weight. That's it. They don't promise you anything else. So they could turn that unallocated gold back into allocated. That means that they unwind all that stuff that they did over the years, right? Unwind it. So what does that mean? That means the money doesn't necessarily need to come from the US government. It's probably money that were hidden in US commercial banks' balance sheets all these years that they're unwinding. Make sense?
So just like bringing all that metal back?
Yeah. So they bring all that. So the US bullion banks are the US government proxies in that case. Right? It all makes sense, right? So that's why the U.S. government don't need to spend a lot of money to repatriate this gold because it's already hidden in U.S. commercial banks' balance sheets.
What would you tell stackers to actually focus on, since everyone's only focusing on the COMEX? What would actually be? Where would their time be better spent?
I'm a stacker myself, right?
Yeah.
So I look at the LBMA a lot because I'm trying to figure out if they can fix this T+6T situation for gold. And if silver is going to break and become T+60. Now, if silver breaks, it's screwed because gold, what they're doing is they're actually borrowing, in quotation marks, gold from foreign central banks. So how do they do it? Well, when the LBMA tell you that they have like 8,500 metric tons of gold, a lot of it in the vaults, they tell people that. A lot of it they can't access because it's Bank of England custodian, like Bank of England is custodian, all this gold for foreign central banks. So the foreign central banks would put their gold in the Bank of England vaults, which is basically the LBMA vaults, okay? You see? And they would let the Bank of England custodian it.
Yeah.
and the LBMA is counting that as the gold that is in the vaults.
Yeah.
Does that make any sense?
No, yeah.
So they can't access it because it's allocated to the foreign central banks, right? So what they have been doing is they have been begging these foreign central banks to release that gold into unallocated so that they can deliver it at the LBMA. And a lot of people say, well, why the hell are these foreign central banks so dumb? Why would they let the LBMA guys borrow it? Well, a lot of these foreign central banks are like Argentina. They owe the IMF a lot of money. So what did the West do? Right? Usually, they wrangle. They incentivize. Exactly. That's what they do, right? They tell these small countries or whatever country, they tell them if you don't let us borrow your gold, we're going to call your loan.
Yeah.
Whatever billions of dollars you borrow, right? So that's what happened. But guess what? This doesn't exist for silver. So if the LBMA runs out of silver, what are they going to do?
They don't have a option because they don't have the supply.
Yeah, there's no central bank with like 10,000 metric tons of silver lying around.
In fact, if any central or any government were to stockpile silver, it would immediately cause every government in the world to stockpile silver, which would cause a major supply issue. So they can't do that.
Yeah. So that's the situation, guys. So any other questions?
No, King Kong, I think you covered a crazy amount of information, and I'm going to have to rewatch this a few times just to make sure I'm accurately understanding everything. But thank you so much, King Kong, Eric Yeung, for being on here on the SilverWars show. And we will have you back on soon to explain more crazy topics and complicated issues that you break down into easy, bite sized tidbits, segments. So thank you again, Eric, for coming on, and we'll see you soon. And good night.